Good morning from Chicago, traders. Thanks for joining me as always. It's 8:01 a.m. Chicago time on Monday, the 12th of January, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Quite a bit to cover on the overnight. The rundown, I'll give you the summary, which I take off of Trade the News, one of the news services I use, and the one I rely on the most. European equity markets opened slightly higher following sharp declines on Friday ahead of possible European Court of Justice ruling on ECB bond buying purchases, which may come later this week. Lower oil prices weigh on energy producers. Shanghai equities decline. Alcoa reports results after U.S. close, and that kicks off our earnings season this week. I'll go over the calendar for the week briefly in a bit. Markets await the European Court of Justice pending decision on the OMT bond buying scheme. OMT is the Outright Monetary Transactions Program. This is really important, especially if you're looking at Bund, Euro, Euro currency, Euro pairs, things like that. It's going to be very important to see what the European Court of Justice decides on this. A negative assessment has the potential to lead the market to assume the flexibility and the scope of any ECB QE could be limited. So the market's going to be fairly attentive to what the Court of Justice decides on that. Other than that, we have the daily calendar. Looking at today at about 8:35, 5 minutes after the open, ECB calls for bids on a 7-day main refi. So if you're looking at treasuries, at 9:45, ECB announces weekly purchases under its covered bond program 3. And then at 10:30, we have a treasury to sell 50 billion in 3 and 6 month bills. At 11 o'clock today, those who are in ags, the USDA releases the supply and demand estimates, World Agricultural Supply and Demand Estimates, which is also known as the crop report. At 11:40 today, Fed's Lockhart, 11:40 Central, Fed's Lockhart speaks on U.S. economic outlook in Atlanta. At noon, Treasury to sell 24 billion in 3-year notes. Let's take a brief step back and look at what we have ahead. So we just covered today's calendar, but for the week, since it's earnings week, it's important for us to look at what's going on. But I'll cover the key items for this week. Tomorrow, Fed discount rate minutes come out at 1 Central. ECB's Nowotny speaks. Fed's Kosher Lakota speaks. Wednesday, advanced retail sales, import price index, business inventories, crude oil. Fed's Plosser speaks, and then J.P. Morgan and Wells Fargo release earnings on the pre-open. Thursday, we have PPI, initial claims, Philly Fed, Nat Gas, and then in the earnings, we have Citigroup, Bank of America, Schlumberger, Intel, BlackRock, and PPG. So very, very busy week for equities. Friday, Eurozone CPI, US CPI, industrial production, and Michigan sentiment, preliminary Michigan sentiment being the key figure here. We'll have ECB's Costa speaking, as well as Fed's Kosher Lakota, Fed's Bullard. But we also, Friday on the pre-open, I think approximately 5:45 to 6 a.m. in the morning Central, we'll get Goldman Sachs, as well as Charles Schwab. I want to remind you also that Martin Luther King Day is on Monday. This is a bank holiday, which means that Friday will be the we might see some prep for that. On Monday, the pits are closed, equities are closed, banks are closed. Globex is open. Futures Globex is open. I believe the equities index products are pretty much anything that's open will close down at 12 p.m. Central, 12 p.m. Central, 1 Eastern. So just plan for that. That's next Monday. Okay, that's that. Let's go over the technical picture here and look at the story as the market is trading. Let's start off with a little bit of crude. Crude oil has been in a holding pattern for several days, and has formed a pretty, I don't know why it's not on here, maybe it was a different chart, a pretty interesting balanced profile. Let's make it solid block so we can see it. So a very, very balanced profile in crude, point of control of 48.70. Once the market started trading above value high, I put in a target of 49.92 on the upside of crude that would close the gap zone above that was left behind, 49.92 being the low of the 5th last Monday. But really it has not been able to go anywhere all week, but there's a fair amount of energy that was accumulated, approximately 830,000 contracts traded from Tuesday through Friday, and it looked like it was coiling for the next leg. Of course, given the overall trend, the next leg is more likely to be down than up. If we go back to the last balance, let me bring this to the front. If we go back to the last balance, you can see there was a tremendous amount of compression that happened in crude before it broke lower again, and the trend is continuing. I figured this would be a continuation wave here that was taking place over the last week of December and into the first week of January, but it doesn't seem like the selling is ceasing. I think there was a news article about Venezuela and Saudi Arabia and talks about how what steps they're likely to take next, or they're agreeing to cooperate on what steps to take next to control this slide in crude. Pretty much everybody's in the red with crude as far as break even at this point. So now we have a break lower. If we look at the all sessions, we'll see that crude has tumbled again. So on the overnight, crude has taken a dive and has continued to do so through the European session. This is our largest rotation up for the day right now. It's occurring right on the pit open, but crude does not seem to have found its buyers yet. It keeps testing prices lower, seeking lower prices, and buyers are not responding at the moment. So that's the condition of that market. I do have some longer range targets below. I had 46 and 42, but really it's just a guess right now because this is a fundamental issue with the battle that's going on between OPEC providers and the shale oil folks and things like that. Lots of politics in that game. On equities, if we look at equities, essentially what we've done is we've made new all-time highs at 88.75, double top week high, which I commented on over the break while I was in Florida. I did say that this is leaving behind a very weak high and a really ugly profile, and it truly is an ugly profile. This profile shows no consensus at all on prices as we slipped lower, and we've jumped above the 2014, which was our over underline and is now our point of control for this region, for this micro composite, and the market's making its way back up. So I'm going to shrink this micro composite here to to this last swing, and you could see here that the point of control is at 2015, and we managed to push through the next area, and I'll show you this in a more a clearer chart in a minute. But essentially what the market has done is it pushed through to the other side and tested 2060. 2060 is really key in this area. 2060 is the upper point of control. It is the most traded price before the highs, and we had talked about this on in December, stating that if the market takes back 2060 on the way up, it's likely to make new all-time highs, and it did. And now we're struggling with the 2060 again. So we pushed to 2060. We stopped short of it, about 6 ticks short of it on Thursday, and then on Friday we pushed through to 2061. So we pushed through by 4 ticks, and sellers stepped right in on the open. The market gapped up just tiny bit and got responsive sellers all day Friday for a bearish engulfing pattern, and currently we're trading 2039 on the low end of that B-shaped profile, which we'll look at in a minute. But that's the big picture. The big picture is we are battling in this middle high volume node here on the MC. If I pull in the action from the past, you can kind of see that this is also representing the middle of balance as well for the bigger time frame, but it's a little too murky for me. So the next target up, if we do come back, take out the 60, the next target up is going to be 67.50, 79, and then new all-time highs is the way it looks right now. I would again remind those who are continuously shorting the market to use caution, use options to hedge your position. But risk is really key here, because I've seen a lot of people sell, get excited about the selling, and get obliterated just a week after. On Friday, we simply traded back through our range of Thursday, which was a gap up and push day. Friday really expected a test of 28.75, this high volume node, 28.50. It got to 31.25, so it stopped 6 ticks ahead of it, and bounced back up to the mid, as you can see here, and sold off a little bit on the close. Pretty good delta on the close selling, but overall Friday did not accomplish anything. It just took back Thursday's trading and has created a double distribution MC to trade off of. This MC is really important. This micro composite that we have here is really important because it defines very clearly a double distribution, almost a triple distribution, and the line in the sand is this 44.75, 44.50 area. Really clear area that buyers will have to take back and defend, and if they do, then the next target up will be 55, 55.25, brings us to where we started on Friday. So that puts 60 on deck. Not saying it'll do that today. I expect today to be a somewhat of a lazy day. I was again. I was very wrong on my read on Thursday, and I want to be clear about that. I talked about it on Friday, in that there was no responsive buying, which was a clear indication that there was strength, and it put 2060 as a target, and we got there. We almost got there at 58.50, 6 ticks short, and then on Friday, the primary hypothesis was responsive selling back to the 52, 54, and 52 areas, and then I expected it to chop around between the 54, 52 areas and the 2060, and it did not do that either. It basically pushed through, and it was almost a driving type of behavior, almost an OTD type opening, and sellers were dominant on Friday. We have a B-shaped profile, which means that which is showing us that longs were getting squeezed out, long liquidation, and the market closed below the point of control on Friday, and has stayed in the lower end of the range. So that would foretell a lower low coming into the Globex session on Sunday. The market did not make a lower low. If we look at the high how it traded overnight, we see strength here. So that's our first clue that this is likely to be an inside day. Today, there's no consensus on the overnight. Pretty decent price action, okay volume, 185,000 versus about 200,000 being the quote-unquote normal or the first standard deviation, and no consensus on price at all on the overnight session, just battling both ways. But we did not make a lower low on the overnight, and to me, this is telling me that we're likely to be stuck in this range today, and that's my primary hypothesis. A very, very close second is a push, is a slight push higher towards this low volume node at 2044.75, a test, and then sellers step in and push it lower and start targeting the 2028 again, and then closing the gap zone down to 2023.75. That'll be my my key target below. Again, the key target above 2060. Let's have a look at where we are in a big picture sense again, by pulling in this this composite profile, which needs adjusting actually. So as we pull in the composite profile here, the red areas, this is just a dot profile. It shows us where the volume is very clearly, overlapping our current price bars. This is a 60-minute chart, and you can see here we pushed to the bottom of this high volume node. This is the second most important, or second most heavily traded area on this profile. This MC goes back to 1031, the gap day, and then what the market did is it came back from below and stopped, and then it gapped above our high volume area and pushed right through to the next high volume area, and now we've sold from that high volume area back down to almost the next high volume area. So you can see that the auction is being methodical here, moving from high volume acceptance to high volume acceptance, these two prongs here on the composite, and we're in the middle, and that's why I'm expecting chop as a primary hypo, because it just could not find sellers to push through down into this high volume node again, at which point, if it did, if it had done that overnight, I would have expected buyers to come in responsive back towards 2041 and 2044.75. But since it did not do that, it's showing a little bit of disinterest by sellers, buyers stepping in to hold prices on the S&P 500. So for today, the primary hypothesis again is for it to push back up towards 2044.75, battle it out, but I expect pretty much an inside day. I don't expect there to be much too much action. Crude oil selling off, and there's been a slight correlation, with pretty decent correlation actually, between crude oil and the S&P, although the energy sector represents less and less of the S&P now. But it does trade in sympathy, so I'm keeping an eye on that. But you have your primary hypothesis. I'm out of time. It's 8:20. Good luck, and I'll catch you tomorrow. Take care.